You're watching Mining.com's News of the Week. I'm Rachel Lee. Let's get started. Canada has approved Anglo-American's $53 billion takeover of Teck, clearing the way for one of the world's largest copper producers. The federal government secured legally binding commitments, including moving the company's headquarters to Vancouver and investing at least 10 billion Canadian dollars into the country over 15 years. The deal cleared review faster than expected after gaining shareholder approval last week. Now called Anglo-Teck, the company will keep its primary listing in London while also trading on the TSX, NYSE, and other exchanges. JP Morgan Chase Bank and the U.S. government are backing Korea Zinc's plans for a smelter that's worth $7.4 billion in Tennessee. Korea Zinc is one of the world's largest processors of the metal, and they've said on Monday that it's going to establish a foreign joint venture called Crucible JV to oversee the project. This deal is just the latest in a flurry of Trump administration measures that are aimed at establishing domestic supply chains for key minerals. The Department of Commerce and the Pentagon have made a series of transactions that have seen the administration take equity positions and offer millions of dollars in funding to metals projects. The Society for Mining, Metallurgy, and Exploration is cautioning that decades of restrictive policy will slow the pace of recovery for the American mining sector. After more than 30 years of legislation and land use limits, U.S. President Donald Trump's policy shifts that began this year to reshape permitting, investment, and national security priorities will begin to take form in 2026. A series of executive orders now guide federal departments to cut permitting delays, open land for exploration, and expand domestic processing capacity. The effects of Trump's executive actions this year are expected to become more clearer in 2026, according to SME. Copper shot up to a new all-time high as an improved growth forecast for the U.S. economy gave further boost to the metals rally. Three-month futures on the London Metal Exchange advanced as much as 2.1% to $11,800 a ton on Thursday, surpassing an earlier record set on Monday. Now, the move follows an upgraded economic outlook from the U.S. Fed, which projects that the world's largest economy will grow 2.3% next year, up from 1.8% previously. Traders also reacted positively to the Fed's widely anticipated interest rate cut as the central bank sees U.S. inflation slowing down to 2.4%. Now, so far, just this year alone, copper has risen by nearly 35% on the back of a healthy demand outlook and concerns over supply. Zinc Smelter Group is one of China's largest zinc smelters, and they've broken a supply contract with Teck Resources' Red Dog mine in Alaska because of hefty tariffs fueled by Beijing and Washington's trade war. The world's two largest economies imposed triple-digit tariffs on imported goods from each other at the height of the trade war earlier this year. Both reached a trade truce and trimmed the whopping tariffs after multiple rounds of trade talks, plus a meeting between Donald Trump and China's Xi Jinping in late October. But sources reported by Reuters say that existing double-digit reciprocal tariffs still make it difficult for Chinese smelters to import zinc concentrate from the United States. A Utah-based mining company says that it's discovered a massive deposit of rare earths and other critical minerals, calling it potentially one of North America's most significant finds to date. Ionic Mineral Technologies revealed that assays from its fully permitted Silicon Ridge project in Utah confirmed it as a halloysite-hosted ion absorption clay system. Now, clay, when compared to the conventional hard rock geological system, is easier to grab minerals from. The company says that this clay system also represents the same geological formation that supplies about 40% of China's total rare earth production and over 70% of the world's heavy rare earth elements. China dominates the rare earth sector, leaving U.S. industries dependent on foreign imports. Export controls on over the 17 minerals used in electric vehicles, consumer electronics, and defense caused months of disruption over the course of the year. Thanks for watching Mining.com's Bulletin. We'll see you in the next one.